Yo, it's Sammy Trades NQ back with another video, and today's video is going to be liquidity and how price tends to move to these liquidities, to this magnet of liquidity, and how you can understand where the next move is, basically. Let's get into it with some examples. Awesome. So we got NQ, ES on the right. So just normal on the 15. I just wanted to just show examples. So we've been in a low key in a bullish trend right here. We're making higher highs, higher lows. Higher highs, higher lows, higher highs, higher lows, higher highs, even higher lows, even higher highs, even higher lows. Just keeping that bullish trend. But there is a reference called buy side and sell side liquidity, and I just wanted to reference that. So just in general, let's see if we can get the same moment in time. So we have these two examples right here that we're gonna have, that we have price action, right? We have buy side right here, and we have sell side right here. So we end up taking buy side right here. What are we gonna do? We're gonna take sell side. We didn't end up taking all of sell side all the way down here. We end up going up. But what do we do here, right? We put an SMT here, and then go up. Here, don't take buy side. Go into these bearish fair value gaps, and then dump lower. And then rebalance this move on ES to NQ, and move higher to take more buy side, right? And to finish up taking buy side. And that's what ended up happening here as well. We took buy side. And then what are we going to do? We're going to dump a little and rebalance the move. And it's a constant reoccurring thing. And definitely this market lately has been just going directly up. I mean Nasdaq has never moved. The markets have never moved this particular way. And in so many years, this only move has happened twice in the last years of the market. So definitely something historic. But again, the market moves and generally takes swing highs and swing lows. And once we take a swing high, we're going to end up taking a swing low. So what are you going to do with this information? So let's just pick a random day, right? Let's pick a random day. Let's just pick some random day in April, right? You're going to go, oh, let's actually not do this one because the market moved so much in this particular. Let's do February because it moved like 1,000 points or something like that. So let's do a normal day. So let's do February 10th. I'm back. Alright, right? Let me put this on the 4-hour. Alright, so what do? We put almost relatively equal lows right here. Nasdaq sweeps these lows. ES doesn't. Putting an SMT, indicating that we kind of want to go up into the market, and we're probably most likely going to want to take buy side. Just in general, probably is the same draw on liquidity later, and then here we're low-key kind of chopping as well, so we got to be mindful of that. Like it's not like a complete trend to the upside. So we could either continue to go up here. We also have some 4-hour fair value gaps right around here. There are two stacked ones, so right here. So price can end up going up here, going into these fair value gaps and taking more sell side. Because we're low-key kind of we're kind of not like going anywhere, right? We're kind of chopping, making lower highs and lower lows. We kind of broke structure right here, making a higher low right there. And continue, we're kind of just chopping in this range, but this is a clear distribution leg down to the downside, and then we got stopped here with this SMT. So your goal is to keep practicing with this in the market and kind of just go on the 4 hour and kind of see where the market ends up playing out. Like you just keep playing and see, you see, and see what ends up happening in the market. Like ends up happening is that we create this fair value gap that was here. We retapped into this fair value gap and we started pushing even lower. And that's what you should do on your own practice and see on the overall, in your overall knowledge of the market, and just try to see where you could get right? Because then price ends up, you see this, we ended up taking this low, right? And then we're also trending down even more. So in general, just keep messing around with this, understanding where the market's going to go, where it's going to basically kind of like see if we take sell side, where should we go? Buy side, right? And I mean, the 4 hour is really hard to predict. Not predict, more understand if it's going to go there due to like news and things like that. Something like the 15-minute could be a lot better to do this and test this on. You just pick which time frame you want to be on, see if it could take these swing highs and take these swing lows, and definitely understanding when these swing lows and swing highs are taken, and you can understand if the market's really going to go up or down, because the market needs to take liquidity. It needs to go and grab it, right? So it needs to get people out. It makes money from taking people. The banks make money from you getting your stop loss, and you getting your stop loss. They make money from you getting stopped out, and just people turning into cash. But yeah, I mean, again, just put those examples, figure out your buy and sell side liquidity, see what big swing highs and swing lows that you have, like these swing highs, these swing lows, see what's going on, see what price is going to do in those swing highs and swing lows, mark out your fair value gap so you could see and have that higher time frame basically bias to trade, because it's truly what's going to help you out. Like at the end of the day, really sitting down, looking what swing lows and swing highs have been taken, what's next to get taken, and where kind of the market wants to go. You need to think that in your mind. What did we take, where do we need to go, and how do we get there? Honestly, that's it. And it's going to be a short, quick minute video about that. If you have any questions, please comment, like, and subscribe. Thank you very much.